Hello guys, welcome to How to Trade New York Session Part 2. In this video, I'll be talking about how to trade afternoon session specifically. Now, if you haven't watched the Part 1, I'm going to drop the link down below in the description, so I recommend watching that video first before watching this. So let's get in. So before I actually want to talk about a couple of things before I dive into the technical stuff. So the reason I'm covering the afternoon session is because some people, they're working 9 to 5 jobs and stuff, and they don't have time to trade the morning session. So this video is specifically for those people. I do not encourage you to trade both afternoon session and the morning session. I would say just stick to one of them, either or, because it gets mentally exhausting if you start to trade both sessions. I'm talking from experience here because I've been trading both sessions for educational purposes, and I can tell you I started getting mentally drained. So let's dive in. Afternoon session. So afternoon session comes with several things, several models. And the most common model is the morning session dealing range. What I mean by that is basically the morning session creates a dealing range, and within the scope of that dealing range, you can trade the afternoon session. Now let's find an example. Here's one example right there. So this is a bearish example, and if you've been watching me, you guys already know that I've been using 15-minute to get my liquidity data in the dealing range. So I'm using 15-minute for the afternoon session as well to get the framework. So here, let me go in replay mode here. 12. Let's go here. Okay, so this says Monday, October 2nd. New York Open is about right here. This candle is New York Open, and it trades higher. It takes out the buy side, then it rejects and attacks the sell side here. So once this candle closes here, it gives you the dealing range, right? From high to low, from here to here. This forms the morning session dealing range. Now, once you have this information, you actually have a time frame, or not a time frame, but a framework to trade for the afternoon session. So what I mean by that is, once the morning session creates this dealing range, you can look for, if you're short, so this is a bearish example, so I'll be talking about premium areas. This is equilibrium of the range, premium area, and a discount area, right? So what you want to do is you want price to retrace into a premium area or a premium array. This can be order block mean threshold, a fair value gap, inversion fair value gap, etc. So in this case, we have this fair value gap here in the premium area. So I'll annotate this as premium fair value gap, right? So what I would wait for price to do is for the afternoon session trading into this premium fair value gap, and then from there rejecting this area and purging the sell side. In this case, the sell side is this low, because this is the swing low. We have a higher low on both sides of this low, so this is the swing low, aka sell side liquidity on the 15-minute, right? So I wait for this retracement. Now the sell side is gone. Let's wait for the swing low. Okay, there's a new swing low here, and that means we have a new dealing range, like that. In this case, we also have this little area here in the premium area, so I'll take that as well, right? And I'll wait for a retracement. Now we're retracing into premium zone. Go one more candle. Now it touches the premium fair value gap and rejects and sells off very quickly into the sell side, and this sell side will be our target because there are no other swing lows in this area, so you can target this sell side over there. And you can enter. Let me go on the 1 minute. This is the entry model. Oh, I can't go on the 1 minute. I hate trading view. So in this area, what you'll want to see is basically a lower time frame, raid, structure shift, fair value gap, and that fair value gap will be your entry. So in this case, if I want to visualize that on the 1 minute, it'll look like this. So this is going to be the 15-minute premium fair value gap, the center. So this high represents this high on the 1 minute. Then there is going to be a structure shift here. Excuse me. Structure shift here. And with that structure shift, what you want to have is a fair value gap within that area, and you short that area. Let's put it this way. You short that area, and you will target the sell side represents here, and the sell side. Let me go back one more, and you're done with the afternoon session in this case. So it trades into the sell side, rates the sell side at 230, trades into the premium fair value gap at 215. And if you ask me like whether you should target this low as well, I wouldn't. You know, you can leave runners over there, but I would really be content with this this trade over here because it's like 9 to 1. Let's say the lower time fair value gap was somewhere here, from there to there, 70 something handles with Nasdaq. I would definitely be content with it. So this one's the bearish example. Let's see what happened afterwards before market closes, and it trades higher. You see, that's why I encourage everyone to be mindful of the 15-minute swing points, because these are the levels that usually you see retracements like this, or I mean, this is a reversal, but like it can retrace a deeper retrace, give a deeper retracement, or reversal like this. So every time price trades into a swing low on a 15-minute chart, you should be mindful of that. So I recommend watching the price action live like this. On the left hand side, you're gonna have a 1 minute chart. It can be 30-second as well. Oopsie. 30-second as well, 1 minute chart, or you can change the layout and stuff like that. Anyways, let's go further. Let's go and find a bullish example now. Let's see, guys. By the way, I was asked if if I could cover forex as well. Now I could, but I do not trade forex at all. But I do know for a fact that whatever I'm showing you guys, it works in every market, including crypto. Although I'm not a huge fan of crypto, so I'll be mindful of that as well. So let's try to find a bullish example for here is good. Okay. So the same logic. Let's go back here. I think. Yeah, here would be good. I think. So this is. Let's go one more. This is 12. I'm waiting for 12. Now I'm waiting for a swing low. Okay, now we have a swing low. So the same logic for the bullish example. The morning session will create some sort of a dealing range from from low to high. Yeah, low to high. So in this case, the swing low, swing high is here. This is our buy side from the morning session, and this is our sell side, aka swing low from the morning session. For the bottom. Now this run over there creates the dealing range, which gives us a framework to work in for the afternoon session. So in this case, let's take a closer look. So the dealing range here, well, since we are bullish in this case, we want to be looking for a longer entry within this discount area. So in this discount area, what I see is, yeah, this fair value gap. Oh, it doesn't match though. Okay, so this is not in discount area. However, what I would like to see in this case is basically price trades into this fair value gap for the afternoon session and wicks a little bit into equilibrium of the range or the discount area, but body closes within this fair value gap. That's what I would like to see, right? Then raise the buy side. That's what I want to see. Let's see what happened. Now we are coming closer to that fair value gap. Okay, now we traded into that fair value gap. See what happened. Now it traded, as you can see here, into the equilibrium. In fact, it traded into the discount area here a little bit. But look at the body. As I mentioned earlier, it closed within this fair value gap, so it respects it. That's a signature for me that I'm on the side with the market. Okay, I like to see that. Now, once it traded into the discount area, now you can go on the 1 minute chart. Let's see if I could go. No, I can't. On the 1 minute chart and wait for a lower time frame confirmation, bullish confirmation. What it would look like is basically something like this, where you're coming down, right, traded into there, and boom. So what I'd like to see is, this is the 15-minute fair value gap here, discount fair value gap right there. Then I want to see a market structure shift like that, and within that market structure shift, I want to see a fair value gap, and that fair value gap is going to be my long entry targeting this buy side on the 15-minute. You can also target this high. That's a swing high as well. There's nothing wrong with that. Now let's go further. Trades one more time. Body closes within that fair value gap again. That's great. And what time is it over there? So now it's 2 p.m. 2:15. Now within that price action, if I could go on the 1 minute at the moment, I can't, unfortunately. There's going to be a 1 minute lower time frame confirmation. So one thing to mention here though is within these wicks over there, you're not going to get a confirmation on the lower time frame. That's important. So if you're not patient enough to wait for the lower time frame confirmation, you would get stuffed out in this position. So I encourage everyone to be patient, at least like wait for that 1 minute confirmation. If price doesn't give an entry on the 1 minute, that's fine. You don't trade for the day and you close the chart. Okay, so wait for that lower time frame, unless you want to get wicked out like this. And in this case, this price action usually frustrates the trader and causes blown accounts, right? Because you get frustrated, then you rematch trade. You wouldn't want to do that. Okay, so let's see what happened afterwards. Trades into that fair value at one more time, expands higher, and boom. Now the buy side is gone. That's our target. It's gone. Now you collapse the trade right here. If you want to leave runners, you can leave runners, but it's 3 in the afternoon, so it's the last hour of trading. I would collapse the entire trade here. So another thing to mention here about the afternoon session is basically you would like to be, personally, let's put it this way. I personally would like to be more conservative with my targets. I do not like to leave runners on the afternoon session. So let's jump on another example. So this price action doesn't happen every day though. That's another thing to mention, because sometimes you'll see, like in here, you're gonna get this is not a good example, but you're gonna get an accumulation or a consolidation for the afternoon session. So this is not an everyday setup, but more often than not, this is how you could trade in the afternoon session. Now, if you don't see a fair value gap from the morning within that dealing range, you do not trade. Simple as that. Or if you do not see price trading into a premium area when you're bullish, or discount area when you're bearish, vice versa. Actually, let me put it again. So if you do not see price trading into a discount area when you're bullish for the afternoon, you do not trade. Okay. And on the other side of things, if you are bearish for the afternoon, if you do not see price trading into the premium array, you do not take a trade. That's it. Simple as that. You just move on, close the chart, and call it a day. Okay? So otherwise, you're gonna hurt yourself, or you could get caught in the, this kind of price action, which you don't want to. Now let's find another example. One more example here somewhere. Now, as you can see, I'm skipping a lot of days here. As I told you, this is not an everyday example, because sometimes you're gonna see price not trading into a premium or this kind of area. It'll just sell off, or rip higher and stuff like that. And in those cases, you do not want to trade the afternoon session. Let's see. I think we have one here, a bearish example here. So we go into replay mode. Somewhere here, yes. Okay. So this candle, this is the New York Open. Okay. We have clean highs here. I don't like to see it, but it's fine. We have clean highs here, and we have from high. So this is not a swing low right now. Let me skip one more candle. Now from high to this low, not that low here. This is our sell side, and this is the buy side. All right. So in this case, we have this high. From this high to this low, we have a dealing range which was set during morning session. Okay. Now, if you take a closer look in this price action, what you're going to see is the equilibrium of the range, premium area. This fair value gap doesn't matter to me because it's discount area. Okay. We have this fair value gap, premium fair value gap, and this premium fair value gap. So these are the levels that I'm interested in. This fair value gap has no meaning to me whatsoever. Let's see. Okay, cool. Both premium fair value gaps. Let's mark them. Not a premium fair value gap. Cool. So now for the afternoon session, this is 11:45 a.m. candle. Now for the afternoon session, I would like to see a retracement into either this fair value gap or this fair value gap. Then I would like to short into the sell side there. Let's see what happened. I'm thinking maybe I should cover these things in Forex FX replay, so I could go down on the lower time frame and can show you guys the entry model as well. Maybe I'll start doing that after this video, but we'll see. Let's keep going for now. Now another thing, I do not care how it trades into these fair value gaps. Okay, that's another thing. Okay, now we traded into this fair value gap. Now I'm on the 1 minute chart and waiting for a lower time frame confirmation. So you see how it rejects the mid level of this fair value gap. We probably have a lower time frame bearish confirmation in this candle, and it is 1 p.m. here. Now the bearish confirmation, as you remember, will look like something like this. Let me, can I move this? All right. It'll look something like this. Come on. Our structure shift, fair value gap, and south side. Now, this represents, let's put it this way, because it rejected the mid level. This represents this fair value gap on the 1 minute. This is a visualization of the 1 minute chart. Market structure shift, probably a fair value gap here, and you short that fair value gap and target the sell side. Okay, and one more note here. As you can see here, there are no swing lows on the 15-minute chart, so no take partials, take profits for me in this price action here. I would full pull to the sell side over there. Okay, let's see what happens. That wick probably stops it out, but the body is respecting the fair value gap, so the idea is still valid. Now we violated it a little bit. That's ugly, and rejected. Let's see what happens. reject it down here. There's a probably, like I said, lower time frame confirmation in that price action over there. You can take the second trade with the leverage, like less risk, and target the sell side. And boom, it's gone. This is another bearish example. Now, let me try to find another example. This one is the same framework, but this gives a reversal model, which is more advanced. I do not recommend trading this one, but if you want to, tape read or back test it, feel free to do so. That's why I would like to show it to you right now. So for this model, what you'll see is usually, I'm sure you're aware of this. Sometimes you see price action like this for the morning, and then for the afternoon session, it, for whatever reason, starts ripping higher and takes out the morning highs, right? Throughout the close end of the day. So this model is going to showcase that, because there is a way to trade that model as well in the afternoon. Let me try to find an example. This is more, this model I do not like to trade it. I do trade it sometimes, but it takes so much out of me, mentally. So that's why I do not recommend trading this model that much. 20, okay, here, just found one. Now let's go this area. Okay. So in this case, this is morning open, rallies, this is Judas, then sells off, right? So the morning session dealing range sets like this, and this candle, this low is 1245, so it's still applicable, right? Now in this case, the hard time frame bias will play a lot. But let's say, since I'm not covering the hard time frame bias right now, let's just move on with this 15-minute time frame framework. Okay, so this is the morning high, buy side, the sell side, and the dealing range is set here. Now within that dealing range, we have this fair value gap and an order block here. Okay, so let's mark the fair value gap, and as you can see, this fair value gap, the majority of this fair value gap is in a discount area. Okay, so if you're bearish in this case and want to target the sell side, this fair value gap is not going to be valid, or it might be valid, but it'll be less low probability. And we also have this old fair value gap, which was balanced, so I don't favor this one because it's balanced. When up's up and down, and this isn't premium, so I'm not going to consider it. If it trades into here, I don't care. I'm not going to short because it's already balanced. What you can look is this order block, maybe, and its mid-level would be in premium, but the order block itself is not going to be in premium, so I wouldn't take that part. I would look at the mean threshold of this order block. So for this is going to reverse into buy side, but I would like to show you how you could trade this reversal and how you can anticipate a reversal in this case. Okay, so let's go further. Now, the reversal anticipation will come with an inversion of this fair value gap, or this is more advanced part of this video. I wouldn't recommend you trading this live, but trade back test it or tape read it, please. So to anticipate a reversal here, you would wait for the CE of this fair value gap to be violated. So a candle close above that CE would be your first sign that reversal might come later on, and it can target this buy side or this one as well. But before that, I think you cannot anticipate a reversal here unless you have a higher time frame directional bias. So either CE should get violated, or you could wait for this entire fair value gap to be inverted or disrespected. So anybody can close outside this fair value gap higher would make it an inversion fair value gap. In that case, you could expect a reversal. That's the second sign. The early sign is CE of the fair value gap getting violated with body close. So let's move further. Now, this fair value gap, CE violated. Now you can wait for or anticipate a reversal. Now in this case, you have this fair value gap within a discount, right? You can use that fair value gap to long the price. Trading into probably the CE, that could be your long. Only if there's a lower time frame confirmation though, guys. Don't forget that part. That's important. Otherwise, you'll get wigged out a lot. Now, this is the second sign. The fair value gap is inverted now. Now you're 100% on the side with the market, but the first buy side is yet to be taken. Now it's taken. Now you can leave runners into here, take partial, or completely close it here. You can do that, depends on the time, or you can target this high. With runners only though, I would definitely recommend taking partials. Like I said, in the afternoon session, you would like to be more conservative with your targets and your partials. Let me move this a little bit. And it's gone now. And this is for 4 p.m. candle. So market closes with this buy side raid. So this is the reversal model. Again, since this is a bullish reversal, the lower time frame confirmation would look like the same as the bullish example. If it was the bearish reversal, it would look like the bearish example, lower time frame confirmation. And the reason you would like to be long below the EQ or to utilize this fair value gap specifically is because it is discount. Now in this case, if price came into, let me just take this like that, trade it into this fair value gap, but this portion, the lower portion of this fair value gap, because that's the only discount area, that could have been pyramid entry as well, or the first entry if you missed this one. So this is it for the afternoon session, guys. You'll usually see 2 things or 3 things. It'll be either continuation of the morning session. You'll be framing your work with the morning session dealing range, because it'll set the dealing range. The morning session will set the dealing range, and you can work around with the morning session price action and trade the afternoon session. That's the first thing. The second thing, you will see a reversal like this, and you'll be working with the same framework from the morning session dealing range. And the third thing can happen during afternoon session is you'll see consolidation. So price is not going to move around, it's going to chop around and stuff like that. And you would like to avoid those days, you know. If you don't see a fair value gap like this from the morning session, just close the chart. You know, you don't want to have a headache for the day, right? So yeah, guys, today this video is probably about it. I'm closing here. If you have any questions, please comment down below. Make sure to like the video if you like my content, and if you could also recommend me what you would like to see in my channel moving forward, I would appreciate that as well. My DMs are always open, either on Twitter or Discord, as always. So yeah, that's it, guys. Take care. Have a great weekend.